Once somebody spots a fraud, it's not just happening at that one RDFI. That ODFI that gets alerted and then shut down could be impacting thousands of consumers and keeping them from having issues. So, we're in a good spot with that registry, right? Obviously, everything could be better, but make sure you're keeping your information up to date there and use it. It's pretty easy to get to off the Nacha website.
Welcome in, everybody. You're listening to Wrestling Payments, a podcast where we help payment professionals contend with the challenges of modernizing their payments operations and identifying ways to build for the future. If you're interested in payments innovation and modernization, you're in the right place. Now, let's get into it.
Hi, everyone. Welcome to Wrestling Payments. We've got a great episode today. We're going to talk about really the biggest thing that's happening today, the rule changes in the ACH. They literally just got passed. I have Sean Carter here with me today. We're going to focus just on a couple of the real key changes. I can tell you that the effective date for these range between really soon and June of 2026. The biggest changes are really related to the new risk management framework. I think Sean's going to get into that. I encourage you, review all of the rule changes. You, as a financial institution, you could be responsible for those, liable for those. As an originator, you may be responsible for those. As a third-party sender, you may be responsible for those. So you need to review all of them. But as we get into this, Sean, how many ballots were passed this past balloting phase?
I believe there was 15 ballots that were all approved with very high approval rates, above 93% for all of them, which means the voting membership of Nacha felt that these were important changes, important enough to approve them becoming rules. The impetus for this really is to try to protect the network. Anybody that's paying attention can tell you that all payment systems, including ACH, are being really challenged right now with fraud, whether it's person-to-person fraud, email impersonation, payroll impersonation, just a lot of credit push fraud right now. Nacha last year came out with a new risk management framework that was designed to give their approach to tackling the issue. And as with all frameworks, part of that was going to be a rulemaking effort. And this is part of that effort. It's not the whole effort, but that we're going to focus on the rule part of that effort today and really try to focus on what I think is a really important part of these ballots is just to talk about how balanced it is. So there's not any one entity being picked on or shouldn't be made to feel like it's your fault in the network. As you'll see when we discuss the major ballot points here, that we're really asking the RDFIs to do a little more. And we're asking originators, third-party senders, and ODFIs to do more as well. And I think that is an important part, right? Because fraud is not something that one party is going to be able to control. It's a collective effort that needs to take place. And that's really what these are all about. And so, Joe.
So let me set this up because
Sure.
If you notice, if you're watching us on YouTube, we are in our temporary office, which is a really just a conference room. We're in the process of developing our new studio. So we're dealing with a mic, and I want to ask some questions. And I'm really going to turn it over to Sean. So a couple of things, I think 2-3 things. One, you were really part of that new risk management framework with RMAG. Can you talk about that? And as part of the changes, there are at least 2 big ones that relate to that framework. So with that, I'm going to actually slide the mic over to you, and off you go. I know you're really involved in these, so please tell us more.
Yeah, so the framework itself, the work that Nacha did, which RMAG supported, but Nacha led the effort. They had a company that did a lot of interviews of different stakeholders of the network to kind of ask their thoughts really on what the problems are, obviously, and then, kind of get some idea of how people thought we could attempt to address it, right? And so basically, the framework that was put out, it's not saying we're going to end fraud, right? It's just saying we want to reduce the number of fraudulent attempts, right? And so past Nacha frameworks were extremely successful. I don't know if people go as far back as you and I, Joe, but back in the early 2000s with all of the fraud that we saw in web and tel when we introduced new SEC codes, Nacha came out with a framework to reduce the number of unauthorized transactions. They did that a number of different ways, right? There was education, there was rulemaking. We instituted a number of rules specific to web and tel. There was also the return thresholds were established for monitoring. So there's always a balance of education and there has to be rulemaking. The interesting part of that framework that made it so successful was you could easily identify if you're winning or not, because you can see a clear drop in the number of unauthorized returns. This framework, which I think is really well done, I think is going to be harder to judge because there's not real data right now on how much credit push fraud is actually out there. So if you don't know what the starting point is, you don't know how to measure how far you come.
Can you define, I mean, that's a big point, credit fraud. Fraud's always been who hit my account and took money out. Can you talk about credit fraud?
Yeah, this is the challenge with this framework because in the past, it was literally about making sure we got bad originators out of the network, right? Or make it so hard for them to do ACH that they wouldn't want to do it, right? Because they are originating the bad debits. In a lot of these cases, these are really good originators, perfectly good originators that are being misled, duped, tricked, whatever word you want to use, being given authorization under false pretenses, which you'll see throughout these new rules, that terminology. And so that is much harder to do, right? Because in the past, if I was an ODFI and you had large rates of return, they just kick you out, right? But I'll use NEACH as an example. We're a pretty small originator for our ODFI. They do a great job for us. I doubt they would kick us out because I clicked on an email and made an invoice payment I shouldn't have. Now, if NEACH was debiting people and they were all coming back as unauthorized, I don't think they would hesitate to offboard us. So I think this is a very different challenge. But I think in terms of the framework itself, the goal is lofty. I just think the measurement's harder. So people may compare this to previous successes we've had with frameworks, and I don't think you can do that. It's not fair. And it doesn't mean this framework is not as thoughtful, insightful, well-meaning as the other. It's just a harder starting point to figure out because you can read some numbers, right? So you can look at the AFP fraud survey every year. You can look at the IC3 Gov report, fraud survey report that came out, and there's different numbers of how much is actually happening. So it's really hard. But I do think the rulemaking part of this framework, which you also were part of in rules and operations, it got at some really tough conversations that the network had to have. And most notably, what is the role of the receiving bank, right? Because ACH for forever has been really, hey, ODFI, your responsibility. And that's not changing. It's just there's going to be more asked of the RDFI as it relates to helping slow down fraud.
So why don't we talk about that? So
Sure.
there's the two big ballots were ballot 1 and ballot 2. You're referring to ballot 2. And it says that this ACH credit monitoring by RDFI, that's a new concept, right?
Yes. Well, it's new in the ACH rules, right? Most FIs should be doing monitoring of transactions for BSA and other purposes, but nothing specific like this is saying for ACH entries. And again, it's not overly prescriptive, which makes it something that you could probably roll into your other monitoring efforts. But the thought behind it is that the owner of the account receiving the fraudulent funds, the RDFI may have a sense more than the originator would or the ODFI if that person was up to no good, right? And so RDFIs with their operations staff, this is the interesting part to me because I think there's monitoring that happens for BSA, right? And a lot of that is managed through software, which software will be used by RDFIs to monitor. But I think the experience of FI staff and operations is going to be really important because they're going to be able to add that other piece of this is not normal. This just doesn't look right. And when you think about what we're asking in this ballot, that's simply what we're asking people to do is try to find those things that just don't look right. They don't make sense.
I think people like examples. And we were talking before, can you give an example where this rule, if it was in place, could have helped?
Yeah, there's a couple of examples, I think, right? So if you look at when we were taking phone calls during the pandemic at NEACH, we got, obviously like every PA, the phones were blowing up. People were saying, hey, I just received Sean's 10th tax return from a different, not tax return, unemployment payment from 10 different states, right? They noticed that because one of them happened to kick out, right? So what happens when you do that, right? And so if an RDFI could internalize that on the second one to say, hey, we have a problem here, then maybe the ODFI that's doing business for that state gets alerted a little bit quicker, right? Not blaming anybody for the end result. This is just not how ACH was looked at. They would consider safe payments because they're credits on both sides, right? Both sides of the ledger consider them very safe payments. And what you found out is they're not, right? And credits can be just as devastating as debits, which is the impetus for the framework in these rules. I also think a couple of years back, RDFIs did do a lot of work when we had the pay your bill scam and the Harvey Dent transactions where somebody was putting the same name in every transaction, paying financial institutions to the point where some were getting calls about liquidity. We had a member of ours that had a challenge with the Federal Reserve because they got so many transactions in that were debits, which pulled from their accounts. The challenge for them was they just couldn't get the returns out fast enough because of the volume. So I think there's been times where RDFIs did some more work than maybe was necessary, but then there was nothing to say, what do I do? How do I make that connection back to the ODFI? And part of the framework does talk about better communication. And I think you'll see that Nacha is going to find a way to use some of their technology to allow institutions to talk with each other about issues like this. Because once they get caught, it's probably easier to shut down within a day or two than if something's up and running for a while. And so I think when we first talked about this within our own membership, the challenges with the proposals were, what do you actually mean? Right? And that's why I like that it's not overly prescriptive. It's basically saying, hey, just make an effort, right? Make an effort as an RDFI to look at your ACH credits as they come in and try to find the ones that are out of pattern or don't look right. And the other question we got in that same regard was, BSA is about patterns, right? And there was nothing in the in the original language that talked about, you wouldn't be in trouble if one transaction went through and everybody was like, hey, we're going to miss one. We missed them under BSA. We missed them under this. And the intent by Nacha is not for RDFIs to be in trouble if a credit happens to post to an account. It's a money mule. Where you'd get in trouble is if you couldn't prove that you've established policies, procedures, techniques to be able to do that. So I think there's a really fair balance on, hey, we know you can help, but we're not going to tell you how to do it because you may find a way that another institution can't. And so the fears that some of our members had, I think were easily taken care of by the way that the ballot was written, which is, I think, why you see such a high pass rate in these ballots, which were contentious for a while. So I think the operations committee, Nacha, everybody did a great job to get us to that point.
So we've been talking about this new ACH credit monitoring by RDFIs, and you referred to the unemployment one was the biggest change. But I want to pivot up to the ballot number 1. The unemployment, when people were setting up, unemployment for me, I wasn't unemployed. The unemployment and their ODFI didn't know, right? So part of it is that the RDFI will now do a little more due diligence and say, why did this one account get 5 different names of 5 different unemployments from 3 different states? And it's not saying that now we have to match names. Not a new rule change. No rumors are started on this podcast. But what does that mean to the originator, the ODFI, the sending part of this?
Yeah, and so this is the balance that I love, right? So we're asking the RDFI to do more, nothing crazy like name match or anything like that. We're just saying do a little bit more. And really the ODFI, the originated third-party senders and service providers who have always been placed at this higher level, right? You should know best what's going on. When you think about the unemployment payments, right? So if you were the originator, the state, right, you're getting valid materials, right, at a time when you're being told to get payments out fast, right? Because that was critical at that point. People forget where we were at that time, and people needed money to keep the economy going. And so what the fraud monitoring by originators, so Nacha years ago, as a result of the early 2000s challenges, created rules around web entries that said, hey, as an originator, you have to have commercially reasonable fraud monitoring pieces in place, which up and recently also included validating account numbers, right? And so on a debit, that's really important. On the credit side, it's some of the other pieces of fraud monitoring that are really important. And so I think as originators, just like a NEACH would, right? Part of what we have to do when we make a payment through ACH, we're paying one of our vendors. Our job is to make sure that was a valid invoice and to make sure we're sending it to the account number where we should send it, right? That's how we monitor and protect ourselves. The ODFI, right, is then going to do things on their end to make sure that I, as an originator, are doing that. And on their systems, they can maybe see either through batch reviews of batches, say, oh, wow, now you have two different account numbers that NEACH is now sending money to. They never did before. Maybe they stop the batch, reach out. So that piece of the ODFI and originator being responsible for everything in the warranties doesn't go away with these ballots. It's just simply saying you're going to get a little more help from the RDFI, but now we want that same level of commitment we did for web debits on all transactions. And it's kind of tiered how the implementation date goes. So if you do greater than 6 million transactions, right, March 20 is your implementation of 2026, and then everybody else is June 19th. And again, to me, I don't know as an originator or an ODFI why you're not doing this today. We put that in as a response to Nacha when they were doing the web rule. We thought it should be for every SEC code anyway. I don't think an SEC code drives fraud, right? It's the actions of the originators and the receivers. So I think this is a great rule, and I think ODFIs and originators can jump on this now, because I don't think it's different than how you would control a small business like NEACH would do it. So the states, right, easily can implement and probably have since the explosion of the unemployment fraud. We know that back when we had the bill payment frauds and the pay your bill scam and the Harvey Dent, that a lot of the large originators, we worked with some with our members, they put in some great things. And, I don't want to name names, but Verizon put in a very cool way of doing this type of detection, and others did it as well. So I think it's really important that we understand, hey, if you're moving money, it's your money, you want to protect it, put in some guardrails. And again, those are going to be different depending on your size. And this rule gives you that flexibility because it's not prescriptive. It allows you as an organization to say, hey, these are my policies, my procedures. Here's how I'm going to do it. The ODFI, work with your originator if there's a problem and help them if they're too weak. But I think the balance we're looking for between 1 and 2, I think, is perfect, because I know everybody has said we got to educate the end users. That's not working, right? Everybody sees commercials about fraud and they still fall for it, right? Because the scammers are so good and people are busy. There had to be something put into the rules to make the participants have to do more. But telling them how to do it would have been a mistake, and I think would have been really hard for people to get to, because systems are different and size and cost and all of that. There's been a really good balance strike in these ballots, and I think it's going to have an effect. Again, the trick is how much of an effect, and you have to balance how much work you're asking people to do versus what's the end result. And so I don't think there's a lot of additional work anybody's being asked to do other than, hey, protect yourself, and then we'll see the results on the back end. So both sides, ODFI, RDFI.
One of the things you didn't mention, and so two things. One of the things you didn't mention, the unemployment fraud, big problem. Other frauds that have taken place or entries originated under false pretenses. That's our new phrase. What we're not seeing today is or what we're seeing more of today is the mules, where they're getting instructions to pull money into an account, immediately move it out of that account, and they may not be aware that they are a mule. They may think they're doing something legitimate. this new monitoring, I think the credits is going to help with those as well. Makes the RDFIs conscious that Joe never has any money. Why did he get a deposit for $10,000? That seems odd, something we should look at. But one of the things you mention all the time, one of your phrases, the ACH rules are minimum requirements. These deadlines are 2026. It's 2024. Do the RDFIs, ODFIs, originators need to worry about that now, or should they wait until 2026?
I think they should be working on this now. And again, think about the end result of fraud. Where does that money go? Trafficking, drugs, weapons. None of this is going for good purposes, terrorism. So I don't think anybody needs, not that I'm blaming people for those things. I don't think anybody needs to wait. I think you can start formulating your plan now, work with your cores, look for technology. What can AI do? And look at spaces where AI could help with this. But I think it's an important piece of when we say there's minimum requirements, right? There's also minimum requirements as a driver, right? You do the things you do so you keep everybody else safe. But some people do more, right? Some people are better drivers, and some people go really slow, and some people don't use their blinker or turn signals, depending on where you are listening to this.
What state you live in.
Yeah, so here in New England, it's guess what exit I'm taking if you're behind somebody. But I think when we're talking about the greater good, I think everybody should be expected to do more than the minimum. And, at least start planning this out, because there'll be technology in 2026 that might not be available today. So these plans will probably evolve over time. And I think that is something that will really be great, right? That should help. If you hear all the chatter about what you could do with AI, and what even the Fed's looking at things with AI, and as an operator, how can they help with things like this? So I think this is a good time to start with this, and just remember that as we adapt, the bad guys are going to adapt. And Nacha actually just put out a great, I don't know if you saw the roadmap. Hey, am I a money mule? They kind of created a nice little document. And again, it's hard for people in it to see that they're being duped like that. And one of the controversial things I remember talking to some folks at RMAG was that ballot one says all this monitoring was for non-consumer originators. So you talked about an originator being a mule, getting money and then sending payments out. They technically would not be part of that fraud monitoring, which I get it, because we don't want to have to treat consumer originators the same as corporates. But I do think as part of your overall monitoring of the account under BSA, that's where that would fall in. Because if I'm dormant for 3 months and all of a sudden I'm getting large payments in and then sending payments out, that's at least worth looking at. So there is that piece that says, wait a minute, would this go far enough? But I think FIs will do a good job once they're monitoring the credit as a receiver. Now they're looking at me at that account, whether I'm defined as a consumer originator or not. They already got me in their crosshairs if my account's starting to look a little shaky. But I do remember that conversation with someone like, hey, why are we restricting this? Because a lot of the mules that push out the payments, they are non-consumer originators. They are consumer originators, which wouldn't fall necessarily under this. So something to think about.
And if you're new to the topic, consumer is a person, regular person. Non-consumer is the companies. I helped build this rule. I didn't even catch that part. I automatically think, my uncle's going to give us the money to get Johnny back from France. So just debit his account. Say it's you, and pull the money in, and we'll get Johnny back from France. There is no Johnny in France. It's not their account. It's not their uncle's account. I would think that ODFIs and originators would consider that when they're building these new solutions. So we are limited in our time. It's a podcast of 20 to 30 minutes. Anything else you want to highlight? Thank you, actually, for being here. You're so involved in all of this, and you do a great job. People love you. We do have the rule changes on NEACH.org or Nacha.org. That resources also, the Are You a Money Mule is out on both sites. Any other things you want to highlight? There are a bunch of other rules that passed. We just don't have time.
Yeah, so there's one that's more of a clarification, ballot number 5, additional funds availability. So already under the Nacha rules, if you as an RDFI feel that a deposit is a little bit suspect, you do not have to follow the Nacha funds availability guidelines. You still have to fall within Reg CC, which is end of business next day. I do think they're clarifying that because now that more people are going to be looking at credits under, this is going to be a more common occurrence. So I would suggest people look at their disclosures as an RDFI. Make sure there's nothing in your funds availability disclosures that would be in conflict with any way that you handle this new clarification under the rules. So, I mean, obviously look at all the rules and, go to NEACH.org. They're out on Nacha.org. You'll find them all over the place. We will have some in-depth sessions on all of the ballots. There's some minor ballots that are just wording changes. There's some other things I think that people may find interesting related to company entry description. But yeah, go look at them, dig in, and as Joe mentioned in the beginning, if you're a company, you need to figure out which of these apply to you and which don't, right? We always talk about the ODFI has to give the originators their obligations. It's okay for an originator to call the bank too and say, am I responsible for this? So I think both parties should be doing that to create an effective ACH relationship.
That's a really good point. Again, there's lots of really good points on all of these changes. The funds availability for those folks getting early payroll availability, that really even makes it longer. It's not indefinite. It's not, until we figure it out, we're holding the money.
Oh.
It's really till the next day. And one of the things you kind of alluded to, but we didn't mention explicitly, all financial institutions who do ACH, Nacha has a registry. You have to register who do you contact. It can't be an 800 line that you call and nothing happens. That's been so useful in resolving issues, and they do and plan on enhancing it. So if you're not registered for that, remember to check that out. It's really good information. You're going to get to a person that can help you out. And, I once someone called and said, yeah, we got a credit and we don't know what it is. We reached out to the ODFI, this was before the registry, and they were just confused at what was happening. And I said, imagine your bank is being robbed right now. Who would I talk to? That really got it rolling. That registry helps with that.
Yes. And you have to make sure you keep it up to date, which is part of the rule. And, again, as part of the framework, that's a piece of what Nacha is going to do as part of this, is enhance that to allow FIs to have better communication. Because once somebody spots a fraud, it's not just happening at that one RDFI. That ODFI that gets alerted and can shut down could be impacting thousands of consumers and keeping them from having issues. So, we're in a good spot with that registry, right? Obviously, everything could be better, but make sure you're keeping your information up to date there and use it. It's pretty easy to get through off the Nacha website. If you need help, contact your PA. If it's NEACH, contact us. If you're in another part of the country, maybe with a different PA, they can help you get to that registry and find who you need to contact.
Great. All right. Well, that calls it an episode for today, or a match. I had to put in some wrestling theme somewhere. Thanks for joining me. Lots of things to talk about here. If you have any questions, reach out to your PA, reach out to Nacha, email us at info@wrestlingpayments.com. Happy to talk about it. Tune in next time. Thanks a lot.
On behalf of NEACH, your trusted resource in payments, and our guests, I'd like to thank everyone for tuning into the podcast. If you've enjoyed this episode and want to hear more about payments innovation and modernization, you can find the Wrestling Payments Podcast on the podcast page of NEACH.org or wherever you subscribe to podcasts. Just search for Wrestling Payments in your podcast app. Thanks for listening.